You check the S&P 500 every morning, but the real warning signal is 7,000 miles away in Seoul. In 2008, the KOSPI, South Korea's main index, crashed 2 months before the Dow. No one noticed. Why? Because Korea is the world's factory floor. Its companies ship semiconductors, ships, and steel to every continent. When global demand weakens, KOSPI feels it first. It's a leading indicator. A canary in the coal mine, but the system is rigged to ignore it. In 2022, the KOSPI dropped 25% before the S&P even blinked. By the time Wall Street panicked, Korean investors had already lost billions. The mechanism is simple. Korea's exports are the world's economic canary. When orders slow, KOSPI falls. Then the rest follow. But most global investors are trained to watch New York. They ignore the signal from Seoul. Why? Because of the home bias fallacy. We trust what's familiar. We think the US market is the only game that matters. But the data doesn't lie. Every major recession in the last 20 years was preceded by a KOSPI drop of at least 15%. Yet the financial media rarely mentions it. Because the story is too complicated, it doesn't fit the narrative. So the warning goes unheard, until it's too late, and you, the retail investor, are the last to know. But the worst part, the same pattern is repeating right now. In 2023, KOSPI fell 8% while the S&P rose. The canary is singing again. And no one is listening, because the system is designed to keep your eyes on the shiny object, the Dow, the Nasdaq, the S&P. Meanwhile, the real story is happening in a country you might never visit. But its stock market knows your future. So the next time you check your portfolio, ask yourself, what is KOSPI doing right now? If it's falling, the canary is dying. This is why, when KOSPI drops,